JetBlue grew revenue 14.5% last quarter and turned an operating profit into a $141 million operating loss doing it. $341 million of new revenue and $147 million worse at the operating line. Rank the expense lines by dollar increase, and the whole quarter resolves into one row. Revenue for the 3 months ended June 30th was $2.7 billion, up from $2.4 billion. But operating expenses grew $488 million to $2.8 billion. The net loss more than tripled, from $74 million to $247 million. And the loss per share went from 21 cents to 66 cents. Here are the lines that moved, ranked by dollar increase. Aircraft fuel, up $407 million. Other operating expenses, up $45 million. Salaries, wages, and benefits, up $23 million, or 2.7%, which means fuel has just overtaken payroll as JetBlue's single largest operating expense. Fuel is 83% of the entire increase. $407 million out of one line. JetBlue's fuel bill went from $504 million to $911 million, up 80.8%. Fuel was 21% of revenue a year ago. This quarter, it was 34%. Every other line in the filing behaved. First, test whether a one-time charge explains it. It does not. The only special item in either quarter is a $24 million charge in the prior year, and it went to zero, which made the comparison look better rather than worse. Excluding special items, operating income went from positive $30 million to negative $141 million, a swing of $171 million, not $147 million. So was it capacity? More seats flown? More fuel burned? No. 6-month fuel expense was $1.5 billion, and the quarter alone was $911 million. So the first quarter was $573 million. Fuel rose 59% from the first quarter to the second. In the same 2 quarters last year, it fell. Capacity does not move 59% in 90 days. Now strip fuel out. Revenue grew $341 million, while non-fuel operating expenses grew only $81 million, 4.4% against revenue growth of 14.5%. Revenue less non-fuel cost improved by $260 million. Fuel got $407 million worse. That difference is the $147 million swing. Exactly. JetBlue could have paid $770 million for fuel and broken even. It paid $911 million. The $106 million gap between the operating loss and the net loss is not new debt cost. Interest expense was $147 million in both quarters, to the dollar. What deteriorated was interest income, halved from $33 million to $17 million as cash came down. And the tax line barely helps. A $271 million pre-tax loss produced only a $24 million benefit, an effective rate of 8.7%, held down by a valuation allowance. Here's the line that should worry a reader. Retained earnings fell from $717 million to $151 million in 6 months. Total equity fell from $2.1 billion to $1.6 billion. Another quarter like this one, and retained earnings go through zero. Liquidity is not the near-term problem. JetBlue holds $2.2 billion of unrestricted cash and investments, plus $800 million of undrawn revolvers. Total debt is flat at $8.5 billion. $236 million comes due in the rest of this year, and $478 million in 2027. Then it steps up hard, to $1.8 billion in 2029. A discounted cash flow model would be dishonest here, so this analysis does not run one. Operating income, net income, and operating cash flow are all negative, so the whole answer would come from an assumed terminal value. 2 filing anchored frames instead. At $6 a share, market capitalization is about $2.2 billion. Add the debt, subtract the cash, and enterprise value is roughly $8.5 billion. So the listed equity is about a quarter of it. And the filing says a 10% move in the cost per gallon is worth $309 million a year, 14% of the market capitalization. On a commodity JetBlue does not hedge. JetBlue ran its non-fuel business well this quarter, then paid $911 million for fuel, unhedged, and none of it mattered. Watch the fuel line and the equity line. Nobody wrote this by hand. Ranking 9 expense lines by dollar increase is an afternoon of an analyst's time. And every number came out of the filing's own XBRL. The same pipeline runs on any company that files with the SEC. And a private company reporting in the same format is the same job. This entire analysis was built on the RoboSystems SEC shared repository. Structured filing data for every public company that files. Revenue, earnings, balance sheet, cash flow, segment breakdowns, all queryable, all from the original XBRL. If you want to run your own deep dives like this one, the link is in the description.